Hello, everyone. Welcome to Financial Update. And this show is going to focus on what's current events and talk about interest rates and all the things that have happened recently. With me is my guest, Liz Baker, financial advisor with Edward Jones, and Jake Mudip, also financial advisor with Edward Jones, all local in Palos Heights. And I'm going to turn this over to you, Jake, and let you roll with it because there's so much has happened in this last couple of months since we had the last show, and I'm going to let you roll with it.
Sounds great, Ron. It's always an honor and privilege to be on the TV spot here, and looking forward to diving into some topics on the markets. And we're going to spend a little bit of time today kind of focusing in on interest rates. We've been getting a lot of questions from our clients in the last number of months about interest rates in general, what it means for mortgage rates, bank rates, CD rates. There's all sorts of interest rates that have been moving around quite a bit because of bigger events, of course. And we hope to just add a little bit of context to that discussion. So we're going to touch on things like inflation, touch a little bit on some of the post-election Washington fiscal considerations, and then finally we'll touch a little bit on the Federal Reserve and some of what they've been up to.
Okay, I'll let you roll with it.
Sounds good. So just to spend a little bit of time talking about inflation, I think we're all certainly well familiar with that from a day-to-day vantage point, going to the grocery store. I've got 6 kids of my own, and I'm certainly feeling the effects of inflation. And, a lot of what we're experiencing on a day-to-day consumer side is really a price level of inflation, which is definitely elevated relative to a number of years ago. A lot of what gets talked about in kind of financial circles is the percent change year over year in inflation. So I think that's an important distinction. Day to day we're feeling that price level, but markets tend to look at it on a year over year basis, which it's a different, significant difference there. But just to speak to kind of where we've been in the markets, we had peak year-over-year inflation in the summer of 2022, and that came in at just over 9% on a year-over-year basis. And now we had the October inflation prints come out recently, and on a year-over-year basis, the headline number came in at 2.6%. So looking back over 12 months, much less than what we were looking at back in 2022, but still not quite down to where the Federal Reserve would like it to be. They're kind of trying to target that 2% rate. I don't know if you have any other thoughts just on the past numbers or where we're at now.
I think the question I get the most from clients is like, the price of eggs is still so high. And what Jake said is that inflation is always there's always an element of inflation in our economy. So, but when that jumps 9% like it did a couple of years ago, yes, those prices are going to be higher, but they're not going to be rising as quickly as they did that one year. So I think when is that going to come down? It's not going to come down because prices are going to continue to go up because inflation is always in the economy. So.
Well, when people hear inflation is either going up or going down, if it's going down, they're looking for those eggs to become much cheaper next week.
Yes.
It doesn't happen that way.
It doesn't happen like that.
So I get your point.
Yeah. So I think that's important. My clients, I find that's important for them to understand. Those inflation numbers are going to always be going up 2 or 3. What the Fed wants is around 2%. But that doesn't mean the price of your eggs is going to come down.
Right, exactly. And it'd be looking for that and complaining about it. It's not going to happen that way. So you might as well accept it.
Yeah,
right.
Yeah, and I think just to build off of that, I mean, that's where having a portfolio that's designed to kind of help protect your nest egg in the face of, the rising cost of goods and services, it's critical.
Yeah, the protection has to be there by proper investments of your portfolio.
Right.
Correct.
So you're receiving the right amount of revenue or income to offset whatever increases are. And if you are in the proper investments, those investments, hopefully, by your expertise, is going to increase to compensate for that increase in price of groceries.
Yeah.
Correct. Yeah.
Goal is to outpace inflation. So when I retire in 25 years, my nest egg is big enough to handle that continuous growth of inflation.
Yep.
So.
Yeah.
Yep.
Okay.
Yeah, so one of the other kind of moving pieces, we'll say, when it comes to inflation and even more broadly speaking, obviously we just came off of a presidential election and a lot of questions coming in from clients on what does this look like under a different political regime from a market perspective, and definitely warranted questions there. It's hard to fully answer that because of just uncertainties of what the campaign trail might say versus what actually gets implemented.
It is too early,
Yes.
really.
Yeah.
I mean,
Right.
the new administration is not in office.
Right.
And there are going to be lots of changes. That be good or bad, those changes won't be made until after inauguration.
Right. So one of the words that's being thrown around a lot is tariffs and how they're going to impact inflation and the economy. And just want to explain that tariffs are a tax on incoming and imports and outports. So there's uncertainty. Again, like you said, there's uncertainty. We don't know if it's going to be broad-based tariffs across the board for everything coming in and out, or if it's going to be certain to one country or another country. But the news cycle and the media tends to run and say, oh, this is going to be a huge impact on the economy. But we don't know yet. So just trying to rein in that fear a little bit in that we don't know, and a diversified portfolio will help with overcoming that. So.
And of course, there's a lot of discussion, and if, excuse me, if the tariffs are there, and they're going to increase prices of certain products,
Right.
hopefully, and I'm sure that the intent is to bring those manufacturers back into the U.S.
And that's what tariffs tend to, or can
Encourage.
possibly have an effect on diversifying global supply chain.
Yeah.
So, and that in the end can benefit the consumer in the U.S. too. So,
Yeah, well said. That's well.
Yeah, and I would just second that, and ultimately, tariffs have the potential to have a step up in the price of goods, but I guess
over time, that inflation, going back to inflation continues to go up, so that zeroes out basically when you're looking back, because inflation is looking back at the price from year to year. So as you move that year going forward, you're going to see just the inflation zero out basically.
Yeah, I guess where I kind of lost
sorry.
my train of thought too, but we've seen the markets absorb tariffs, and still, like, tying it back to inflation, we've seen the pace of inflation drop even in light of additional tariffs, not least of which was under the Biden administration. There were additional tariffs that came on board, yet the trajectory of inflation still came down in the face of those.
It's the impact of tariffs on inflation are not as overstated as they have been recently in the media, I think, is the point.
Yeah.
So.
Yeah.
Can you touch on the interest rate adjustments being made, and what does that do? Is that impacting mortgage rates, and how does that work?
Yeah, so that's a really good question. It does get quite complicated because the interest rate, you have the entire so-called yield curve that goes all the way out from overnight lending rates to 30-year mortgages, and all those rates are interconnected, but they're not always directly correlated with each other. So in general, in September, the Fed started to cut the interest rate, and a lot of people know about that because it's well publicized in the news cycle. But when the Fed cuts rates, what they're doing is they're dropping the rate that banks use for overnight lending. So that's a very short-term interest rate level, and it has a pretty direct impact on things like money market and bank savings rates, but it's not necessarily directly correlated to mortgage rates, which are typically 15 to 30 years. So in a way, what's been going on since September, the Fed dropped rates. They did it again in November. So that's easing monetary conditions and making it easier for money to flow through the financial system, which is intended to kind of continue to promote growth and GDP acceleration in the economy. What I think a lot of our clients are looking for is a little bit of reprieve on those mortgage rates. They remain elevated relative to pre-COVID rates, and some of the recent market activities have kind of pushed them a little bit higher again, and we'll have to just kind of keep a close eye on that and see if they do come down. That'll obviously be beneficial to housing affordability, things like that, but hard to predict on the trajectory of that.
I think the housing market is probably waiting for a change for the interest rates to come down, and that eventually is going to happen. And of course, we don't know, as we previously talked about, the administration now is going to be in. What are they going to do in force, and that could change the interest rates on mortgages, and we don't know that.
And I think important to note too is the interest rate changes have the most effect on like you said, the short term. So you see an interest rate go down, you immediately see your money market go down, or your bank savings rate go down, or your one year CDs rate
right.
come down.
Right.
Where the longer end of the spectrum of loans move slower with those incremental interest rate drops. So, whereas in 2022, when we saw the interest rates go so fast, that's where we saw both the long-term rates come up, but also the short-term rates come up. So,
yeah, and realistically, I mean, these things can change quickly too. I mean, the market likes to assign probabilities to the number of Fed rate cuts that are coming up over the next 12 months, things like that. And as recent as last week, Jay Powell was at the Dallas Federal Reserve Bank and talked about not being in a major rush to cut rates, which was kind of a little bit of a pivot from some of his earlier talking points. So all it takes is a news conference such as that to get the market kind of thinking, okay, maybe we have fewer rate cuts coming up. So I think we got to continue to monitor that situation going forward. It's important, and we have to pay attention to it, but we also want to kind of zoom out and just make sure that as we're working with clients, we're building portfolios and financial plans to sustain, a whole wide variety of different interest rate regimes that could, come down the pipe.
There's a lot of factors to take into consideration when you're working on a portfolio, and to build that portfolio proper to protect, as you mentioned, to hit that protection later on in life. Yeah.
Yep.
Yeah, there's a whole host of different risks. It's market risk, equity risk of dropping, or a bear market is something that can happen in stocks, but there's also interest rate risk that needs to be looked at and analyzed, as well as, like we had talked about earlier, that inflation or loss of purchasing power is a legitimate risk that needs to be mitigated too.
If there's someone interested in trading stock, are you able to attend to that assignment as well from your client?
Yeah, we're full service at Edward Jones, so anything from CDs to stocks and everything in between. But
insurance.
Okay.
Also.
And insurance as well.
All of the different full service. So.
Yeah.
Anything you want to add to our update today? We covered a lot.
Yeah, we did. Just want to encourage, if you have questions that are on your mind, I mean, we we covered a lot, but we also just kind of scratched the surface on some
Right,
of these
we
topics.
sure
So, we're available for any questions that may come up.
Well, I'm going to have at the credits at the end of the show, your address is 12306 on Harlem Avenue, and your phone number is 708-671-1845. We'll have that posted. And if anyone has any question, as you had mentioned, they can call you, and you can go from there. I'm
Yeah.
sure
Sounds great.
there will be some people that are going to have some questions going forward for this word protection that you mentioned.
Thank you, Ron. We appreciate you having us.
Yeah,
Well, thank you for
thanks a lot,
coming
Ron.
out. Okay, for Edward Jones giving us the update, and myself, Ron Jankowski with Channel 4, we wish you a great holiday coming up with Thanksgiving, and we'll see you soon after that.